welcome to the second of that we've been doing here in conjunction with the team at Figured and the team at Xero. So Murray Nankivell, for those of you who have had a little bit of exposure already, we've been using Figured for our farm management reporting and our cash flow budgeting, and also our farm performance analysis as a tool to help us talk to our clients around that. And we've also been using Xero for a number of years now for our financial reporting and our BAS reporting, and also managing the income and expenses in and out of the business, both for farming and non-farming businesses. So both firms and products we've been using well and would highly recommend. So what we've got today is just a little bit of a presentation to give you an understanding around how the two products link with each other. Just to open the door and give you some ideas around how Xero can provide your BAS reporting and your financial reporting, and also give you some detail around how you're spending things and what's going in your farm and what's happening. And then also tying in Figured using the overview reporting, cash flow budgeting, farm performance analysis, development of statement of positions, and also being able to use some scenario planning. So they're both two tools that we use with our clients and also use amongst our team to assess how your business is going. Today, the process of what we're happening is we've got some couple of specialists that we've been able to work with closely over the last few years, and we're really pleased to have Sarah from Xero along today. She's going to give you a bit of an overview of the Xero side, and we've also got James or Jimmy from Figured. So James is going to give you a bit of a live demonstration and take you into some Figured files as well. So the context of today, we've already seen people using the Q&A button down the bottom. So yes, it's a little bit different. We're not all in a room facing each other and sticking our hands up or asking questions. So please use the Q&A button to flick through any questions, and the panelists, being myself, James and Sarah, will also answer the questions that we can as they come through. We'll also answer a lot of questions towards the end. So there'll be a session at the end where you can hold some questions and flick them through, and we'll answer them here via the web, or also if they're more detailed, we'll get back to you individually and follow you up. So that'll be towards the end of the product. What we've seen in terms of why we're looking for tools from a farming perspective to be able to have conversations with our clients, and it's important for us to be able to give you sound advice and to help you plan to reach your long-term goals, both personally and on the farm. And what we need to do there is we need to be able to forecast and look forward. And one of the areas that you'll see out of the Figured program is a tool that we call scenario planning, which is allowing us to sort of take the figures that we've got from your farm today and then be able to look forward and just crystal ball and say, okay, well, these are the things that we're going to tackle in the future. This is how we can look forward and present what your business may look like in 5 years' time, in 3 years' time. It can also really help to look at things like succession planning, expansion, or actually exiting. So being able to put some metrics, some data around the fact that this is what you see happening in your business over the coming years, and then be able to show you what the outputs of that, and most importantly, present it to people who are relying on that information, be it banks, be it your own individual family members or the like. So one of the things that's important around is to have some things to look at. What a tool you also hear a fair bit through Figured is called forecasting. So ability to look at your cash flow needs. At the moment, commonly we would see from a livestock perspective that now we've just had it, we might have some lambs on the ground or some calves dropping. We know our numbers. We're forecasting ahead what we think the price per head will be on our sales and when we're going to sell them. So being able to look forward and forecast what our cash flow of our business is going to be on the farm and over the next 12 months. And we can also flow our cash flow out from a 5-year perspective, not in as much detail on a month-by-month basis, but also looking ahead on an annual cash flow basis. So a really important tool around Figured is being able to assess the farm, not just on a cash flow basis, on a performance basis, then look at cash flow forecasting and plan ahead what your needs are for your cash throughout the next 12 months, and also longer term scenario planning. So some real tools that we use across our offices. Obviously, Murray Nankivell, we've got offices through Murray Bridge, Bordertown and Narracourt, and we have quite a wide range of clients, mixing from pure just livestock farmers to to most often with mixed farming. So we've got some cropping, we've got potentially some grapes or some horticulture, along with livestock. Today we're going to focus predominantly on livestock. There'll be a little bit of a touch on some mixed income coming through on the reports, but today we'll mainly be focusing on livestock and also how that flows back into Xero as well. So without ado, I might pass over to Sarah from the Xero team to give you a bit of an update and a bit of an overview on the Xero product for those that don't use Xero. For those that do, it might also be a handy refresher on where you can enhance what you're using in the Xero side. Part of our plan going forward is also to have a bit of in-depth detail webinars in the next 12 months on specific areas of Xero. But today I'll hand over to Sarah just to cover the overview. Thank you, Sarah.
Thank you very much, Mark. Welcome everyone. Thank you for joining. My name is Sarah and I have been working for Xero for the last 4 years. Before that, I was an accountant in practice, but I actually grew up on a farm. So I grew up on a cropping and beef cattle farm in Western Queensland. So definitely have had a lot of experience with obviously needing to be on a farm and connecting with our advisors. So what is Xero? Xero was born in the cloud. It is a beautiful, easy to use accounting platform for businesses that you can use on any device, wherever there's internet. Xero has more than 2 million subscribers in over 180 countries, with more than 726,000 of those in Australia. Xero does provide that real-time collaboration with the banks, apps, and your advisors like Nankivell. Xero is ATO recognised software for single touch payroll and GST. We do have best-in-class data protection, and we always have continuous updates and innovation happening. Living in a remote area means being able to connect with your advisors is so much more important. The single ledger, the concept that we have at Xero and Figured, provides you with one source of truth for your business. It means that any advisor in any location can collaborate from this single central point. So you can see here for your small business what some of the features that Xero can provide. So Xero will be able to do your bank reconciliation, your invoicing. If you have any expense claims, you can import your fixed assets, and it will also have payroll. So from there, you can also lodge your business activity statement through to the ATO, or obviously engage Nankivell to assist with that. On the other side of the wheel, we then have our practice tools and obviously our reporting, but notably today, our connected apps. So Xero's ecosystem of apps, like Figured, integrate with Xero and provide another level of connected collaboration. So introducing Figured. Figured is a software that works hand in hand with Xero, exclusively offering livestock, dairy, crop and production tracking, farm budget forecasting and farm planning. Figured only integrates with Xero as they recognise it's the leading accounting software. On that note, I'm now going to hand over to Jimmy, who is now going to take you through an overview of Figured. Thank you, everyone. I hope you enjoy the session.
Alrighty, thank you, Sarah. Hopefully everyone can see and hear me. We'll work our way through this. Do shout out if there's any questions throughout this. Myself and Mark will try and pause so we kind of get through some key features, but yeah, don't be afraid to throw things in the Q&A and we'll address them as they come through. As Sarah mentioned, we integrate exclusively with Xero. It's a very important partnership for us. And really, it's largely recognising that Xero is the leading accounting provider in this space now. There are other ones out there that provide cloud solutions, but they Figured wouldn't be the package we are if we, you know, worked with those other packages in the market. Kind of core concept of Figured is really our collaboration. So we talk about it as the farming team. And it's really based on the fact that we use the single ledger concept from Xero. So we've got everyone working in the same platform there, be it accountant, bank keeper, farmer, the like. And then we extend that obviously to look at the management reporting and extend that user group. So we have farm consultants, other family members and that kind of stuff, all connected to the Figured farm as well. And we typically see probably 7 to 10 users on most of our farms, and that's really because, and there's no limit on users as well. So you can invite as many people as you like, all accessible via the cloud. Very much a collaborative process. We'll jump into a bit of a demonstration here and talk you through some of the key concepts. So a lot of you at the moment may be budgeting with spreadsheets. That and probably apathy are our two biggest competitors in the market. Spreadsheets, look, they're an enormously versatile tool, and everyone loves the spreadsheets that they've developed. It does become a difficult thing as the businesses get more complex, and it certainly becomes a lot more complicated as you are working with advisors as they kind of forced to interpret everyone's unique spreadsheets. Figured being a planning tool, there's a lot of features in here that are going to look like a spreadsheet, but there's some really strong underpinnings in there. Our planning tab is probably the biggest example of this. So it does look exactly like a spreadsheet, as you'll see, but there's some pretty powerful things going on behind the scenes here. So for a start, Mark mentioned cash flow. Obviously, cash is king. We're a cash flow planning tool primarily. It's what, particularly the focus right now, but obviously banks and the like are obviously very cash focused. But we are a full three-way planning tool. So behind this, there's also a profit and loss running and a balance sheet as well. All of that budgeting is done off the back of the Xero chart of accounts. So in this example here, you can see I've got all my chart of accounts running all the way down. This has all come through Xero. So we've built out the budget in exactly the same format that we're going to record our actuals against. In this view right now, I'm looking at 2018 year. And the way we build our budgets is a fairly unique concept in that we're always looking at where we are in Xero. So the actuals up to a point, and then we're going to take forecast entries from then on out. This is very, very important because if we don't know where we are and we don't have good clarity about where we're at right now, then it's really hard to make an accurate position about where we're going to land. We talk about this from a conceptual perspective in Figured. We use the term rolling plan, and that's because rather than just looking at a 12-month chunk, budgeting for that, putting the budget in the top drawer or saving it as a spreadsheet and never looking at it again, it's very much a proactive planning experience. So we've got a plan in place for this year. We've got some actuals that have flowed through from Xero. We've got a forecast for the remainder of the year, which gives us a closing position. But as simple as a click, I can flick over to the following year and I can continue planning. Right, and it becomes a very dynamic experience. My livestock numbers will flow through, my opening balances from Xero and those kind of things, which I'll show you shortly, will all flow through. So this rolling plan makes it a much more proactive experience where we're constantly refining the forecasts. What gives Figured the more farming elements that you're probably here to see is a concept we call trackers. So effectively, they give you the granular detail that you're going to need to substantiate the budgets in providing to bankers and stuff like that, but also they allow you to record some of that little bit of extra granularity that you're not going to get in a accounting tool like Xero. So for this example, we're in livestock focused, obviously, but we're talking about tracking stock numbers by class. We've got weights behind the scene as well, so we can track live and carcass weight. For those of you that are also grain producers, we track production by tonne, we track yield by hectare, we track milk by kilo of milk solids or by litre. So anything that you can produce, you can track within Figured. Let's have a bit of a look at how a tracker looks. So in here at the moment, actually we'll show you where we got to from. So we've got a trackers page. Like I said, we're just looking at just beef cattle in this example, but if we jump into here, we've got a similar view to the planning page. So at the moment, we're looking at basically part year actuals and the remainder of the year in forecast. So we've got some opening stock at the start of this year. We've had some births, we've had some sales. We can do aging transactions as well, so we can move classes in and out. It gets us to a current position based upon our date selection at the top. And then we have a forecast position for the remainder of the year. So what we're expecting to happen for the remainder of the year, any additional sales, and gets us to a closing number. You can see in this example, I've broken this down a fair bit. So I've got individual classes, I've got genders as well. So I've got male and females, and I've gone to a reasonable amount of detail. There is a lot of variability in this. Mark can probably talk to it in a little bit more detail than me, but there's no, it's not quite as structured as this. It doesn't have to be used in this way. We do see some users keeping things quite simple, maybe even just a single stock class. It really depends on the outcomes you're seeking.
Yeah, I think if we speak to a number of clients, they'll possibly just have cows in there and calves and bulls, and that's perfectly fine. We will see other clients that have, to the extent that Jimmy's got there, which is also having the breakup through aging and the like. It does come down to what you see as a business and what you want to report on. There is some benefits if looking at a 5-year scenario plan to have some of that more detail in terms of the aging, because you can use that to automatically calculate what your stock looks like over a 5-year period. And you might say, why would we want to do that? And one of the questions that we often are doing, particularly when we're looking and talking to banks around some future planning and some future building of assets, is quite often we might have a scenario where we've sold a lot of stock in 1 year and have a really good result from a cash flow perspective, but we've actually sold off a lot of our breeding herd. So therefore, we're going to see a real impact in year 1, year 2, year 3 afterwards, because we don't have that offspring coming through. On the other end of the coin, we also like to talk to banks about where we've deliberately kept some heifers on, or we've deliberately kept some ewe lambs to build our breeding numbers, and then also to build our future income. Obviously, that's not going to show in cash flow, but by having this type of reporting and being able to show the banks that, we can show that we're building assets and building future income. So it's important that we're having some conversations around looking forward, showing, and you'll see if you've had some discussions with reviews around banks lately, they do want to know what your livestock numbers are looking forward, not just for now, but in 2 to 3 years' time. So having the ability to forecast forward what your stock is, particularly because that's your main driver of income, that's really important. So the tracker side and the granularity, you can choose what is suitable to your business. Like I said, simplistically cows, calves, bulls, or ewes, lambs, rams, or you can go to the level that Jimmy's got here. And look, it'll just depend on how you analyse your business. Just remember, the detail is what you need to make decisions, not what you expect someone should look at. You need to have the information to make key decisions around your business and to plan for the future. So it will be flexible depending on your needs.
Yeah, exactly right. And you can see I've just gone into the settings page here, which shows you that there are some other stock classes available. These are predefined stock classes, but we are kind of investing some time in developing a bit more flexibility around this as well. But one of the other features you can do as well is create multiple trackers. So we do see people in this example. I've just got the one tracker, just for basically a breeding beef cattle herd. But let's say, like Mark said, if you had an additional enterprise that you needed to demonstrate, as a significant revenue stream or something that the bank really wanted to hone into, you can create a secondary tracker, which might be for something like a feedlot or a stud. And then what you can do is transfer cattle between that. And we do see that quite often as well. So you can create more granularity. And certainly one of the things we see with the embrace of Figured is often people start simplistically to really get into the rhythm of this kind of stuff. And that's particularly around entering the data and then proactively reforecasting that. And then once they've got into that nice little rhythm, they've found some efficiencies off the back of Xero as well, then we can slowly increase the granularity. In terms of data entry, one of the other places we integrate with Xero, so obviously the chart of accounts has all come through and we've mapped that back to Xero. there's a couple of different methods we can enter data in, but primarily what we're doing is we come to when we're selling livestock or selling grain, so those kind of production focused transactions. What we've got the ability to do is actually enter all the detail into Figured first, and we do this because we might need a little bit of extra granularity. So rather than just going into Xero and saying, you know, I sold $100,000 worth of cattle, we can come in here and we can say, you know, what class of cattle, how many, a weight, and we can enter that weight live or carcass, and then we can enter a price, either in total per kilo or per head. All of this granularity is then captured, and obviously something we can report to against. This little tick box over here is immensely powerful because what we can do is we can tick this, and then once we save the transaction, we can actually add non-stock lines, so you can put your freight and your levies and those kind of things on the transaction as well. Once we click Save Transaction, what it's going to do is it's going to push all of that information straight through to Xero as well. And so in Xero, this is an example of a transaction that's been posted through to Xero. So in here, you can see this has come through, this is what we sold and how much it is. So we've got all that amount, all that entry sitting in Xero, ready to be paid, but we've got full traceability. So we've actually got a link here that'll take us straight back to the data that's come through, and down in our history log as well, it actually says, you know, when did this come in and who was it approved by and stuff like that. So the two programs are very, very, very tightly integrated.
So I guess the key part out of that is just to understand that there's no double entry by using two software packages. Your expenditure will automatically flow through from Xero, so your actual expenditure will automatically flow through into the Figured program, including all of your loan repayments and showing your movement in your liability as well, as Jimmy mentioned before, your balance sheet. So you're getting that granularity of reporting on the both, and also when you enter what we call your production invoices, so your sales of livestock or your purchases for livestock, when they're done in Figured, they flow back into Xero. For those of you that used Xero before, you'll see the little green button when you go to reconcile your bank account, and you just click OK, and that's your entry done in Xero. So very smooth, and the syncing between the two is very good. There's also some messages that pop up if the two don't sync. So that just to remind you to say, hang on, something's just not quite right between the two. Quite often that might be where someone's gone and entered a transaction in Xero rather than in Figured, and then it's doubled up. So there's some really good, easy visual aids to help you to make sure that the data between the two is reconciled.
Sorry, on that note, Xero is always our source of truth. So when we're talking about dollar figures, obviously we need some integrity behind it. Xero is obviously that, being an accounting package. So all the dollar figures for those kind of things are always flowing through. But you can see here we've got a banner message on this that says that we've got an inconsistent balance between Figured and Xero. So in this example, just a little demo farm that I've kind of created a few problems in basically so I can demonstrate them. But we've got some sales that are recorded in Xero that aren't in Figured. We're still, from a financial perspective, we're still going to report this number in Xero because we know that's truth. But what we're flagging is that in Figured, we don't necessarily have the corresponding livestock movements to align to that. So it's really prompting you to reconcile those kind of things. So trackers, like I said, really what gives Figured that farming element. And like I said, as Sarah introduced, we've got a variety of different tracking, basically, depending on what you want to track. So all livestock classes: sheep, beef, wool, eggs, grapes, grain, all that kind of stuff as well. So, and each tracker is essentially customized to get the best benefit for those kind of enterprise types. We'll go back into our planning tools now to see how the two things loop together. So the planning grid, which I introduced you to initially, there's this rolling plan. So our trackers work in a rolling plan environment. The planning tools work in a rolling plan environment as well. If we look up the top here, we've got our beef cattle enterprise. So we've got some forecast transactions at the end of the year expected to happen. We've got some actual transactions for the green top half here, that have happened is here as well. Again, this is being built out from the Xero chart of accounts. As the actuals are flowing in, we've got the ability to then query them. So if you're not too sure what was in this, we can click in here. It'll take us back to Xero. Obviously, we're logged in here, and it will run a query and say, right, that 394,000 was payment for an invoice. We can look at what that invoice is. So we're always being able to basically dynamically flick back and forth between the transactions, and that's across the board. So all the way down through our expenses and stuff like that. Again, if you want to query something, you can just jump in, click a button, and it will take you through as well. In terms of building out a budget or the data entry in here, I might just flick this back to the actuals to none, which is going to put us in a position of just looking at a forecast. So we use the word within Figured, just for context, we use the word budget, forecast, and plan basically interchangeably. We're always talking about planning, right? And we do two kinds of planning, which is basically the 12-month planning you're seeing here, and then the long-term scenario planning, which we'll get to shortly. So forgive me if I'm confusing things between budget, forecast, and plan, but they're effectively the same word as what we've seen. So if I'm looking at a full year forecast, some of the tools we've got to be able to build out a budget is, firstly, I can just type in this like it's an Excel spreadsheet. So if I wanted to put some shearing costs in, I could just type in, tab across, enter this kind of stuff in. Again, it looks like an Excel spreadsheet, but all these transactions are hitting all the right accounts. So we're creating cash impact, we're creating profit and loss impact, we're creating balance sheet impact if necessary. We've also got some tools down the bottom where we can copy the amounts or we can spread. So if I know my annual cost for something like this, I click in this cell. If my annual cost was, say, $60,000 and I want to spread that out quarterly, I can, and just click that and it will apply it out. We can also increase accounts. We've created some structure to these reports. So we've basically done a little bit of categorization of these accounts so that you've got some groupings. And in these groupings as well, you can collapse them down. So as you're building your budget, you can see things kind of at a line by line level, or you can certainly zip things up, which is a nice little feature. So we can collapse the whole budget down, or we can expand the whole budget out. Where we get to right down the bottom is, from a cash perspective, we'll achieve what we're looking at, which is basically like an operating surplus. So this is going to be the cash equivalent of kind of an EBIT. And then we've got anything that's non-operating, so interest, finance costs, those kind of things are going to fall below that line. Down the bottom, we've got cash movements to our balance sheet account. So here we're capturing drawings, equipment finance, loan payments, those kind of things as well. And at the very bottom, we forecast GST. And this another place where I integrate with Xero. So this picks up the reporting periods from Xero, whether you're on cash or accrual based for your GST. And then it looks at the current balance you've got, and then it's going to forecast refunds and payments out depending on whether you're reporting quarterly or monthly. And also the bank balance. So what's our balance at the moment? What's our closing balance going to be? And then forecast entry out. We do have the ability to calculate interest on overdraft as well. So for the few months that we've fallen into overdraft, we've got the ability to configure automatic interest calculations for those months as well. So you're not just having to revise that. And that's a dynamic calculation. So as the bank account shifts in Xero, so too will the opening balance, and so too will the overdraft interest as well. So quite a powerful, very dynamic planning experience. Lots of variety of ways to enter data in, certainly from a manual perspective. What we probably see from a workflow perspective a lot of the time is we've also got the ability to import and export. So quite often we'll see people that will export out last year's data and import it in, or even if you have been working from a spreadsheet or something like that, we've got an import template. So you can download the template, transpose your data in from your Excel spreadsheet, and then import that in as a forecast entry to save a little bit of time. So that, there's a raft of ways to get the data in there realistically.
And so commonly in terms of Excel spreadsheets with cash flow budgeting, we'll often see the income and expenditure budgeted. It's not often that we see the GST implications of that come through, and it's not often that we see closing bank balances. So the really important part about being able to do your 12-month budget is to then look ahead and make sure that you're within your limits from the bank overdraft perspective. Or also, if you know that it's going to be a tight year on cash flow, to be on the front foot and talking to your financiers around some overdraft extensions in 6 months' time. You're certainly going to have a lot more reception rather than ringing them up a day or a week before you're going to go over the limit. So it's being able to proactively look forward, look at what your cash flow budgets are going to be, look at what your bank account's expected to be, and revisit this. Revisit it throughout the year. Like I said, 2 to 3 times a year, revisit your forecast and update your expenditure. It might be at the end of a big feed period where there was some uncertainty around how much feed you might buy. You may have bought a lot more than what you expected, or you might have bought a lot less. You can then go and factor in your cash flow and where your position will look. The other thing that we commonly see is the impact on selling and the timing of selling. So if we expect there's going to be some tight months, we may then look at our cash flow budget and quite simply go in and adjust the date. So when we're entering transactions, we're looking at the forecast of when we think we're going to be selling stock, when that cash is going to hit our bank account. If we see that there's going to be a tight period, well, we can go and adjust our forecast pretty simply by changing the date at which we expect the cash to come. So sometimes altering when we sell will then have a large impact on our cash flow balance. Being able to look forward and predict that over the next 12 months is really a key to making some good decisions around cash flow.
Yeah, that reforecasting piece is particularly important. I'll demonstrate to you what that looks like now. Like Mark said, we've got a fairly holistic view of this, in that we've got all our production numbers in there. We've got our overheads and indirect costs. We've also got drawings, capex, those kind of things itemized in the budget as well. Once we're fairly happy with the budget we've got to from a preparation perspective, what we've got in Figured is a concept called snapshots. And essentially what this allows us to do is, if this is the budget we're going to go ahead with the year with, we press this approve plan button, and I'm going to call this, I'm in the 2018 year, so excuse that, but I'm just going to call this the 2018 budget. I've got my actuals to date, and I've got a description, so sent to banker or something like that, right? What we can do is we can approve our plan. Now, what that's done is actually taken a static copy of every single piece of information that may impact a financial, our financial position in Figured. So we're talking livestock numbers, we're talking all of our cost entries, we're talking opening balances from Xero. Absolutely everything is now saved as a static comparison point. What that then means is that we've effectively only ever got one plan in Figured, and that is the plan that you can see in front of you. So now that we've got that static comparison point, we can come in and we can adjust it. So we can come in and we can add some additional expenses, add some additional income, or as Mark said, we can shift things. So I've got a sale in here for May for 241,000. So what we would do is we would go back to our trackers, bring that up, look at our sales. So we might go to our view transactions page, for example. I'll look at my forecast entries. Let's find this one. And May, here it is. So we'll edit this transaction. Timing is going to be everything. So all this thing needs to do is slip by a month, which we can do. So let's push it back by a month. Payment date's going to fall back by a month as well. Press save transaction. When we go back to our planning grid, I'll refresh this. That's going to push that transaction back by a month. Right, and it's going to open up additional holes. So I think last time down the bottom here we had we returned back to a debit balance in our bank account. We're now slightly negative again. So that's going to have implications on our overdraft interest. It's going to have implications on our balance sheet, and that it's very much a dynamic reforecasting experience. With that change made, we can then take another snapshot. So this one might be called June reforecast or something like that. Our actuals might have updated, so we'll be continuing to refine this. And what we've got down the bottom here is we've got the ability to continually not only revise this stuff, but if our default plan has changed, let's say because we've had a major change we hadn't foreseen, then we've got the ability to kind of set what is our default comparison point. But I'll just leave this snapshot in here for now. Reporting is what this is all for, essentially. These are tools that we're going to encourage you to put a bunch of numbers into. The important thing we want out of it is some reports, and we can identify the issues. And then, as I alluded to before, the collaboration in Figured is a really key thing. So, but how your advisors, other stakeholders in the farm. So, quite often, there's a lot of people that have, financial or other interests in the farm. So getting them in and looking at the same set of numbers is really important. So we'll jump into our reports now. Standard set of financial reports, so P&L, cash flow, and balance sheet. These will align to Xero from an actuals perspective, but obviously extend that and turn it into take the forecast out. So we can run all these reports off. Additionally, we can add some quantities under there. So if we're going to run a report off, for example, we can see, this sales for 420 head, this sales for 300 head. You can also do some fancy things where I can add a comparison period underneath it. So I can say, show me this year's budget with last year's actuals underneath it, and those kind of things. A most common report, and probably the one you're really looking for if you're proactively forecasting, is a variance report. So same kind of thing, we've got our actuals that are flowing in from Xero. We've got our budgeted entrance. So this is what we called our snapshot in here. So we've been able to select which, what comparison period we're running. So actual versus snapshot, or actual versus forecast, full year, or just the month, lots of different options in here. Once we've got the report run, the real collaboration we see comes from being able to save a copy of the report. That takes, again, like a static view of this. So none of the data, if data is updated in Figured, this report won't change. We've got the ability to, query things, so maybe was this per head price lower? Add our comments in, go down the list, really easily identify deviations as well. So regardless of the nature of the account, whether it's income or expenditure, red is a bad deviation, green is a good deviation. So we can isolate things really quickly. And then once we've done this and added all our comments in, we can print this off to PDF, obviously, and all the notes will appear. But the way we see a lot of people interacting in Figured is by sharing this out and putting a bunch of emails of various people. So a lot of bankers, their first introduction to Figured is via this function. So put in an email address, it'll send it out. And even if they don't have a login for Figured, they'll still be sent this screen. They'll be able to see all of your comments in line, all of that explanation around the granularity of your farm. This comments feature is available in every single report within Figured as well. So from a production perspective, we do get a little bit more granular.
As you're bringing that up, Jimmy, with the variance report we mentioned, you can also have quantities in there as well. So when you're looking at your livestock sales and you've got some variance, you'll have not just the numbers, but you can also display the quantity. So which allows you to provide some more analysis. Was it price? Was it no? It was purely that we sold 100 less head than what we'd budgeted for. So we commonly see this report being used amongst husband and wife, just to go through and review how their farm's going. And make some comments that they can both refer back to in 6 months' time, or to the full extent where we sit on farm advisory boards and we'll run these reports on a quarterly basis and highlight any 5 or 10% differences, and the manager or the farmer operating the business will then provide some commentary that's shared amongst the farming board members. So it's a really powerful tool to give some feedback onto how the business is going.
Absolutely. The production report is where we take that next step into detail. So if we've recorded the the kilos of production on our sales, then we can, and we've additionally got stock unit calculations. We've done like DSE kind of conversion in here. So boys, sorry guys, being interrupted by rowdy kids. So you can see our production report. It gives us, in this example, I have had options to run it total. I've added in metrics for kilos, hectares, and DSE. And as we drill down, I can see I've got, average dollar per kilo, a cost per kilo, and then all of our expenses divided out on a per kilo basis, per hectare basis, or on a stock units basis as well. All the way down to, looking at, from a cash flow perspective, I can look at the contributions of, drawings and those kind of things as well. And it'll basically get to the point where I can see what's my net profit per kilo of livestock sold. So a lot of granularity in there if you want to get down to that level. I just want to address a question we had from Elke. So just queried the flow of data between Figured and Xero and how we work if the data is already existing in Xero. This is actually quite a common use case for Figured. We quite commonly will have different parties working in both packages. So it might be a bookkeeper that's doing data entry into one package, and then farm managers or something like that working in Figured. Like Mark said, once we find an imbalance between the two. So if I look at this year, for example, we've recognised that imbalance, and what this is saying is that there's actually data that exists in Xero that doesn't exist in Figured. Now, you do have the ability to go and enter this on a transaction by transaction basis, but there's actually some quick tools in there that enable us to deal with this en masse at a monthly level. So instead, if you do want to kind of catch up on 12 months worth of historicals, or you don't see it as being that cumbersome, then what we've done in here is we've recognized that there's an imbalance, and what we want to do is then go through and add sales to correspond with that. We're just going to do it on a monthly basis, or we can do it on an annual basis as well. I'll just update this so it displays correctly. Basically gives us the ability to go through and go, right, we sold X many weaner heifers in these months. Do the same thing for steers, do the same thing for everything else as well. As long as it all adds up, this imbalance will go away, and then you've got full reporting, just as though you'd entered them all in. So we do support, effectively, to sum it up, we support a proactive and a reactive use case in here as well. So if the data's already in Xero, you don't have to delete it out and then push it back through. You can retrospectively add the Figured detail to it. We just find it probably easier because Figured requires a little bit more information to start in Figured and push it forward. So I hope that clarified things a little bit. So like we've demonstrated, the planning experience in Figured is fairly fluid. We're basically constantly reforecasting, constantly encouraging you to update your budget. Might talk through this one briefly with Mark, because this is really how looking at the service offering that's built around it, and your interactions, and certainly an advisor's interactions with the software. So from a Xero world, obviously, well, that's a very much a rolling thing. You've got transactions flowing into Xero every single day. You're coding them off with your automatic bank recs. You're also recording payroll, those kind of things. So a Telstra bill or something like that comes in, Xero recognises it, uses some fantastic features like HubDoc and those kind of things to automatically code them off. For the more granular things from a production side of things, we're going to want to capture that in Figured. Off of that, we really typically see very much monthly planning and tracking. So Figured is very much that monthly tool. So I've entered everything into Xero, I'm coming into Figured, and then I'm going to see where I've finished for the month. And that's really about reconciling things. So what's my closing livestock numbers look like? Is everything up to date? Have I recorded births and deaths and sales and purchases and all those kind of things as well? Off of that, we then have that variance reporting. So variance reporting, and then possibly, and how we're tracking the budget, and then a reforecasting thing as well. So again, identifying, not just look at what's happened, but then looking, in the immediate future, probably the next kind of 30 to 90 days, what's expected to happen. And then, like Mark said before, really making sure we've got the timing right on that kind of stuff. It doesn't take much for a sale to slip and a purchase to come forward, and you can end up in a fairly substantial cash hole very quickly.
And commonly, when you've got your forecasting at the moment, obviously we're doing a lot of tax planning with clients, and having your forecast already in there and having reviewed that, I'll say at the end of March, you've done your March BAS and you just look ahead of what's coming in June. It's very easy for us as advisors to get in and just looking at simply your tax planning, because we'll grab the actual report and we can actually just run a report which has your actuals, income and expenditure for the 9 months, and then you're forecasted for your 3 months of income and expenditure, which allows us to go, okay, this is what we expect to be the full year profit for the 2020 year, and then we use that obviously to then drive into our tax planning. One of the areas that's in development at the moment, I think Jimmy might talk to it in the moment, is around statement of position work as well. So looking at assets and liabilities and having that all in the one spot, and being able to look at, okay, what is our return off of our enterprise? What are we looking like going forward? And also building into the fact of the scenario planning, simple things like building a shearing shed in 2 years' time, and what do we need to be? Also then using the reporting to talk to the banks around how they assess your business. So one of the key components we know about banks is that for every farming business, they look at some ratios. They look at some things like debt to service equity, return on asset, and they analyse your business, which then does come into your pricing. So in terms of your interest rate pricing and how you connect with the bank. So being able to use some reporting off the back of a statement of position, and a statement of position being your assets, being your farming land, your plant and equipment and your livestock, along with your liabilities, allows you to have some really good reporting and some really good discussions with the bank, with your long-term goals with us, and we're here to help you meet your long-term goals. And also what we're commonly seeing at the moment is that the younger farmers planning for education costs for kids, planning for succession away from the farm and handing on to the next generation. And that type of planning doesn't happen overnight. So the ability to use reporting from Figured and to forecast five years ahead is a really great tool for that. One of the things, just picking up on some questions coming through, and it was raised around, Jimmy just spoke a bit about the livestock coming through. You can retrospectively enter the numbers. The one downside on the reporting from that, if you haven't entered the details into Figured, is you don't get the cost per kilo or the income per kilo. So one of the key reports from a livestock perspective, where you enter the average weights off, say, your kill sheet for lambs, is that you'll have a summary report that shows you income per kilo sold. So you'll get your livestock sale numbers in, but it won't give you that extra detail. Now, some people may want that. A lot of our clients, really are interested to see what their average price across their sales for the year is. Some are really interested in just the value per head. So the retrospective entry of sales on a monthly basis will give you obviously your average cost per head, but it won't give you the kilos. And I think Jimmy's just bringing one up there. If I let you talk to that, Jimmy. Yeah,
we do have some ability to add some granularity to that. So for retrospective, it's never going to be as good as a transactional, but we have had users that have made some assumptions there. So this tracker summary report is a perfect example about again, it's probably commonly used as that evidentiary support to budgets. So we're looking at this from an actuals perspective. It could be run on any variety. So we can run on just actuals, just forecast, a combination of the two, or we can actually run it on a snapshot basis as well. So we can look at what we thought it was going to be. So I will run.
What Jimmy means by that, as he's loading that report, will be commonly when we're doing some budgeting with our clients, it's always good to have the top price in mind. And so when we're sitting with some budgeting, some people might say, well, I'm going to budget on $200 a head for lambs. It's really good to be able to bring up this report and say, well, you only averaged $165 per head for across the whole season last year. So therefore, why are you, how do you justify budgeting for $200 a head this season? So using that evidence-based reporting to then make some good key assumptions going forward is particularly good to bring some evidence to those decisions.
Yeah, and look, that supporting all this kind of stuff. This is the in that collaboration approach that I kind of mentioned before. What we hear time and time again, not just from advisors like Murray and Nankivell, but across our partner network, is that the banks in particular will have some of these these preconceived ideas about your business, or also the large data set they've got. So in the absence of granularity, they may make their own assumptions. So certainly being transparent with your calculations and providing any additional insight you can to your business can hold you in good stead in terms from a relationship perspective, but possibly get you in a better perspective when it comes down to those all important percentage points on your interest rate. The piece we haven't really spoken to now is this long-term piece, which Mark's alluded to. I'll jump into this farm here. So from a long-term planning perspective, in Figured, what we talk about is use the word scenarios. Generally, the way this is approached throughout our network is very much around having a broad plan, and again, in the spirit of being transparent, having a broad plan that everyone agrees to. So we'll kind of conceptually talk about this, about having a status quo plan or a baseline plan. A scenario in Figured is anything from 1 year through to 10 years. So you can have variable length on a scenario, but we're always looking at annual values. So we don't go into the real granularity of timing of cash flows and stuff like that. It's much more about a direction setting piece. So in this example here, we've added our asset position in. So I've got a rural property, which has got our area and value per hectare. We've also got some plant and equipment. We've got a cash position, so we've got $100,000 in the bank, but I've also got an overdraft available if I need it. And we've got our a cattle herd in there. We've got this in at market rate. So we've got the ability to set this all the way through the app, but I do have the ability to value my calves, all of our livestock classes all the way through at a market rate as well. I might just add a couple more in here just so we don't cause any errors down the line. 100 there, that'll do. So we'll just press save on that. So getting that market rate in there is really important. Figured has the ability to store these values on both a tax rate. So, you kind of mandated ATO rates of, $20 per head or $4 per head for offspring. But having that market rate in there is really important to see what your true position is. We've got the ability to put liabilities in there. So we've created a liability here, which is just interest only, but you can create multiple liabilities, whether they're being interest only or normal debt structure or fixed interest over a variety of periods. Where this gets us to is basically a net opening position, which gives us an equity percentage and an LVR, certainly two numbers that banks will concentrate on initially in the vetting process. But every scenario has a proposition within Figured. So like I've said with this one, we've really done this as a status quo. So what we've tried to do is say, if nothing else changes, what will be our position in 2 years or 3 years or 5 years or something like that. Long-term planning's not something we see all that well done in the farming sector. Certainly this tool is really trying to push the boundaries of that. And that's largely because the feedback we get is that it's too hard to plan. I don't know where I'm going to be in this time and those kind of things. I don't know where the weather's going to be and that kind of stuff. The counter to that is really that certainly the banks are going to make these kind of assumptions in your absence. So we're going to continue to pay our debt. We're going to continue to have our land assets. Like Mark said before, we've got the ability in here to, if you do add the detail into the livestock classes, then in a scenario plan is really where it comes into its own, because we've got behind the scenes things like automatic births, automatic deaths, and automatic aging. So our 1,500 cows have produced 675 each male and female offspring. We've got a 90% calving rate set behind the scenes here. Then we've got some deaths occurring. So I don't have that configured across all livestock classes, but you can set a standard death rate across the board as well. And then what will happen as we go throughout the years is we'll end up with, we'll be able to see what's happening with the herd. So what's happening in my 2020 2021, 2022, and we're flicking in. And slowly, because I'm not selling my my cows off, my progeny is actually increasing as well. So I've now got 879 calves per year in year 5 compared to 675 in the end. And this can happen, this can be impacted on really quickly. So if I was to sell off 1,000 cows in this year, which I could do, change that number. So adding a sale or adding a purchase is really quick. You can see we're really only impacting on this screen from sales and purchases perspective. But I can impact on that really fast. Just lost audio. Should be all right still. Expenses on a scenario usually kept fairly simplistic. So we can enter enter data in a few different fashions. So either just as one line item or into groups, so into some categories at a figured level, or we've also got the full Xero chart of accounts there if you want to go into a lot of detail. Things like lease and rent, so we can account for leased land, and that'll add into our reportable hectares. Interest is automatically calculated. Taxation is also automatically calculated as well. So I can put in a 30% tax rate and I can copy that across. And that copy feature, you know, I've spread 30% across the board there, but that copy feature is available all throughout scenarios. So you can very basically build out 1 year scenario and then extrapolate that out across the board. Where that gets us to is at first glance, we've got our summary report. So this is really going to be a sense check of the scenario. So what's happening with our cash balance? And then down the bottom is really where we really get into some of these important financial metrics. So interest cover, equity percentage, earnings per hectare, that kind of stuff, and our debt ratio. And we'll be able to see what small changes per year is what the impact's going to be on this over the course of the scenario. Like I said, outputs from a scenario are still annual, quite high level in terms of the amount of detail we're putting in. So we're not going into an enormous amount of granularity. We're not talking about monthly cash flows or anything like that. But we do build out, because we're putting things on a market basis. And this is where we can start to build out that market value analysis. So this is, at the moment, this is the underpinnings of our statement of position work. So I'll just let it load. But essentially what we can do is we can produce a 5-year balance sheet at market values. So we can revise the price for land. We can, have market value for livestock in there. We can make sure we've got market value for plant and equipment and all those kind of things, as opposed to just having the depreciated value that we're going to get from Xero.
The key part that we use to that is just to say, well, if we keep doing what we've been doing, this is where potentially we would look in 5 years' time from a net equity point of view or a cash flow point of view. Or if we kept some more stock to build our herd numbers, this is potentially where we'll be. Or if we decided to sell off some of our stock or change our mix more from, say, cattle to sheep, this is where we would be. So it's a really quick and easy tool, as you saw from Jimmy there, to simply sell off 1,000 head and then see the flow-on implications across the next 3 to 4 years in terms of if you sold 1,000 breeding head, then the reduction from steer income and heifer income, and how that is implicated across the next 3 to 5 years. So a real quick and easy ability. You can obviously, as Jimmy may speak to, you can copy and save the scenario. So you can save the scenario as your base, and then you can play around with a couple of different options and compare where, look, we are crystal balling. That's all we can do. We know things are varying, but we also want to be able to try and look forward and try and make some reasonable estimates about where we think our business is going to go.
Yeah. So in this example, I've switch my audio. Sorry, still working. In this example, we've got our long-term balance sheet. So, like I said, assets are, loans are being paid down. Assets are there to revalue if we need. We do get a landing position. What are we going to be worth, in 5 years' time from an equity perspective? And that's when, like Mark said, we can have those conversations around how we're going to deal with succession. You know, are we going to have enough equity to borrow and maybe buy that block of land next door that we think might come up? We've also got some at a glance indicators down the bottom that lets us, you know, just sense check of this again, making sure that we're picking up. We've got a slight cash deviation in year 3 here, but we do pick it up again in year 4. So we're making sure we're seeing, you know, if we've invested in capex in a certain year, we're making sure we're seeing the impact of that. What becomes really important is once we've got that kind of baseline approach, so once we've got that broad plan that you know, we've got some agreement to, this is where we think this business is headed, then what that gives us the ability to do is be quite agile then. So we can, like Mark alluded to, we can grab a scenario and we can copy it. And then very quickly we can go in and say, as we're seeing a fair bit of it at the moment, you know, so with a bit of uncertainty about, you know, access to sale yards and abattoirs and those kind of things as well. Not sure about the demand from China. Then if we want to copy the scenario, we can do that in 2 seconds. Give it a rename. So I've called another one here. It's my baseline scenario minus 10%. We can change the start year. We can extend the duration if we wanted to. And then once we've done that, we can then we can do our what if analysis. So we've got effectively we've got our path that we're going to attempt to stick to, but we're prepared to be as agile as we needed to. And look, we're seeing this feature being used quite widely at the moment. Again, with that little bit of reforecasting. What if this happened? What if that happened? And that might be risk based. It might be, you know, an identified risk. But hopefully, you know, then what we're doing is we're also looking at opportunities as well. So what if we bought that leased land? You know, what if we paid down our debt a little bit faster? Those kind of things. So quite easy to simulate. Very, very, very powerful tool. And the extension to that, I suppose, is once we have that broad plan in front of us, in our experience, what that makes is it makes the budget, the kind of core budget, it makes it much, much stickier. So rather than it just being a budget that, you know, we have to do and we have to provide it to stakeholders and the bank and that kind of stuff, it then becomes a budget that's probably much more aligned to our long-term goal. And we've got the ability to constantly reforecast that as well. So very, very, very important feature as we're kind of uncovering the opportunities or the risks that are in front of us. So that multi-year business planning, look, you guys do it with Murray and Nankivell every year as part of your tax planning process, but it's, you know, it's a few extra steps to, you know, really extend that out as an annual task. But we also see this being used in terms of that ad hoc basis as well. So, you know, if an opportunity comes up, what can we do? Let's run another scenario. Yep. Do you think we should do it? So we commonly see those multi-year scenarios being fed back into the banking world as well. And that's, you know, really to kind of get through and find out what we, you know, what are our assumptions like and are other opportunities there we can capitalize on. In terms of the presentation, that's it from my perspective. Pretty keen to see if there's any questions here. We can either drop something in the chat. We do have the ability to unmute people, I believe, if you find it easier to ask a question rather than typing things out. So if you'd like to voice a question, then let us know, stick your hand up, drop us a note in one of the chat bubbles, and yeah, we'll talk it through.
As we're waiting for just questions to come through, just to give a bit of understanding around, obviously we've got Jimmy here talking today from Figured. Jimmy's been a great resource for Murray and Nankivell and our team over the last 12 months, helping us through, as has Sarah from the Xero side. So we're very fortunate to have a great relationship with Xero and Figured to provide us with that support and be able to answer questions. Both products have great support online, particularly with their YouTube videos, and also with Figured with the chat, with the little chat bubble to get support from experts at hand. But also from Murray and Nankivell's point of view, we've also got a number of our team members that are quite strong on the products. We've got a number of people in each office through Murray Bridge, Bordertown and Narracourt that we call our Xero gurus. So they're always there to help. And from the Figured perspective, we've got myself and my fellow director, Heath Nankivell and Murray Bridge, who are quite strong on the Figured program. And we've also got a support team behind us with Sandra Richards, Tegan Tranter in Bordertown, Leah Kotha and Kirsty Grady in Narraport as well. So we've got some good team members that can help you with the product. I do know that obviously there's Figured have got some deals happening at the moment across the next 3 months in terms of pricing to help people out, to give them an intro and look at the product. And from here, for those that are keen to get involved and to use the tool, we do see those people being involved in a sort of 4-step process around learning about Figured. Some of you may already be Xero people. If you're not Xero people, we'll certainly get you involved and on that software program and help you get set up and give you some training on that. But then we're also going to look to have a sort of a 4-step process in terms of accessing Figured and how that correlates with Xero. So from today, we're going to email out some reports for you to give you a bit of an idea. Obviously, flying through for a week, it's very hard, and a pesky little fly is about to get swatted away from my nose in a big hurry. But we'll give you some ideas around the outputs, but then also follow up with you and understand if you'd like to know more about the product. But please certainly fire away on any questions that you may have from what's been presented through Sarah and also Jimmy. Normally at this time we feed you with a few drinks and a bit of food to break the tension, but it doesn't look like we're seeing too many questions come through at the moment.
I've got one through from Anna. So Anna's asked, her bookkeeper who enters invoices into it, and then she sends me a batch payment which I pay, which is the best way for me to review where things have been assigned and then do a review. So still this process, we have, if you've got a bookkeeper that's already that's working with Figured or working with Xero as well, a couple of different ways you can do that, so they can continue to do that task, and we can add the granularity into Figured afterwards. You might choose to do that on a transactional basis, or like I said, you can do that on a monthly basis as well. That said, we've got a lot of bookkeepers that also get invited into Figured, so there's no restriction on the amount of users you can have. You can also control the access level they've got. We've got tons and tons of bookkeepers that are entering that will have access to Figured as well, and that's just that additional step. So if like I said, normal bills kind of coming into Xero, reconciled in the bank account. But if they see, an Elders invoice or a landmark invoice or something like that, then instead it's jump over to Figured, put in the granularity there, tick the post to Xero button, and then it's ready to pay. All of those features like batch payment and all that kind of stuff is still completely available there in Xero, because it comes through as a full invoice in Xero if you're on that kind of plan. So no restrictions there, and certainly it's in the spirit of Figured as well, that very collaborative approach. So maybe we do have lots of bookkeepers that will pick up some extra tasks as part of their function in that process as well, curating some data. So hope that answered your question, Anna. Just to reinforce that, no limit on users from either software package. So you can, we certainly welcome people to be invited in. So no real restrictions. They don't pay by user or anything like that.
One of the other advantages of both products is their ability to go back in and alter or make some adjustments if there's been an error. And cheerio out to Dad. I think you're logging in today, Dad. So we might have jumped in there on the weekend and doing my Mother's Day thing and helping out with a bit of bookkeeping. But hopefully Dad can attest to the fact that it is quite easy to go back and alter some transactions and change things as well. So nothing like dobbing the old man in while I've got a public forum.
Yeah, well, additionally, I met Stephen today when he came through the chat bubble and asked me a couple of questions as well. So completed the loop there. Same thing, we can with our support team can query those kind of things and provide a little bit of guidance. So, Murray and Nankivell certainly great to support, but when in the app we can query transactions and make sure things are working appropriately.
One of the questions we've got here, Jimmy, from Monica, is in relation to a template in Xero or other for a return on capital from a capital investment. Maybe you want to talk to a bit of the ratios that are produced in the scenario planning report, and perhaps this is more tying in with where the development may be in terms of statement of position work.
Yeah, so the reporting on assets or return on investment style reporting is certainly, we're seeing a shift with some of the banking covenants is starting to move towards more of those kind of ratios as opposed to just debt serviceability. Figured's acknowledging this. It's not just an Australian change. This is Figured operates in 4 markets alongside Xero at the moment. We kind of follow them around the globe as they land, and we work together to assess the agri opportunity. But so New Zealand, where we started, and Aussie, USA, and UK and Ireland, this is becoming a common theme. At the moment, the solution for this, I'll share my screen back again. That one. Yep. So those kind of ratios at the moment are really only supported in from a scenario perspective. So that's about looking forward largely. I'll scroll down the bottom and wait for this to load. So these are some of the starting ratios we're looking to generate. The next step for us is really making sure we've got the ability to capture all of that asset detail in the core app. It's a fairly complex thing when we're working with Xero, largely not necessarily it's anything to do with Xero, but with Xero being our source of truth, and commonly a lot of farming entities are spread across multiple different legal entities, so a combination of companies and trusts and partnerships and the like. So the objective for us in the next few months is to really make sure that we're making sure that a business can have a holistic view of the market value of its assets. And then once we've got that in one place, so it'll be market value of land, market value for livestock, market value of grain on hand, or in those kind of stuff, including inputs, and then all the liabilities that go along with those as well. So that might be not just bank loans and term debt and those kind of things, but accounts payable, those kind of things that are going to feed through from Xero as well. So we really want the truth behind those numbers of accounts payable, receivable, PAYG withholdings, and those kind of things. Summing all those kind of things up together, sometimes choosing the Xero values because they really can't be edited. Sometimes adding additional information in there for things like off-farm investments and off-farm liabilities. And then once we've got all that information in one place, then it just becomes a really quite a simple process actually to start to produce some quite powerful ratios. So certainly Mark's flagged with us that banks are starting to ask for a few extra ratios. I had one the other day that I hadn't heard of again, but it's been written into a covenant of one of our newer customers. And then the ratio side of things isn't overly difficult. And I'm confident to talk about this in terms of what's coming because this is really how we work. So Figured is being built by, obviously a bunch of developers. Xero is the same thing. We've both got tech companies with large amounts of developers all coding away. But realistically, the suggestions, they come from our users, they come from our partners, they come from our feedback tool. And look, we capture all that kind of stuff all the time. So coming in here, we've got an online feedback tool that you can jump into at any point in time, and you can see what's the most voted things of the week. What are people asking for? You can add your own comments on there. And then, your issue will get to the top. We'll build it. We'll send you an email to say it's out. We'll have a little party, and then next week we crack on and we do it again. Very iterative process, but we're certainly releasing features with a lot more, a lot faster cadence than some of the desktop producers that you may be used to. It's just the nature of cloud software that we can certainly push things out very quickly.
Just from a Xero perspective as well, you are able to create custom ratios for any of your actual data in the meantime as well. So if you would like to see a report like that, please do contact Mary Nankivell.
And I think the key with both softwares is they both export into an Excel spreadsheet. So you know, if you want to get really fancy and you're strong on your Excel spreadsheeting skills, both Xero and both Figured will allow you to export into Excel as well as a PDF, which is obviously can't be edited. So yeah, both Xero and Figured have got some flexibility there if you want to do some different tricky things. I don't think we're seeing any more sort of chats or questions come through. So we might wind up the session. I think, as I said on our session in mixed cropping, normally we would due for drinks and a bit of a social chit chat, but we really appreciate everyone's time to come along today. Really appreciate Sarah from Xero and also Jimmy from Figured for both their time and their expertise. They're both really good to deal with, and we find them from the relationship side that we have as a business working with their businesses very easy to deal with, and that flows through as well. So we appreciate the time that they've had to spend tonight, and we also appreciate the time they've spent with us over the last 12 months, and we look forward to the years ahead in terms of their tools and how they can assist you, our clients, because at the end of the day, we are here, and why are we talking to Figured and Xero? We're here to deliver things that you can make your business drive more. We can help you plan your goals and deliver what you want to achieve out of your business, both personally and from a financial perspective. So our role is to find the tools like Figured and Xero to make your life easier and enable us to help you with your decision making. So appreciate the time that you've all logged on tonight. As we've listened to the last 10 minutes, the rain is absolutely pelting down here in Narracourt. So another cracking start to a year, which is fantastic. So I hope the growing season is really good for you, and look, certainly follow up with your local Mary Nankivell office, Mary Nankivell in Portertown, Murray Bridge or Narracourt, if you want to talk further about these tools, and we'll help guide you through. So I appreciate your time and effort, and I'll leave you to the night. Thank you.
Thanks, guys.
Thank you, everyone. Bye.